Precious metals are often used as part of a balanced portfolio investment strategy, but with heightened political, economic and social risk, as evidenced by recent pressures brought about by global migration, why is gold not seeing the buoyancy that some analysts say the markets should be acknowledging? With more on the precious metals space, we're joined now by Rick Rule, Senior Managing Director, founder of Sprott Global Resource Investments and President and CEO of Sprott US Holdings. Rick, it's a pleasure to talk to you. Thanks indeed for your time this morning.
My pleasure, thank you.
On the IG platform, there's a lot of trade around gold and silver at the moment, and a lot of people are in it for the day, 2 days at a time. But what I want from you is a big picture for the precious metals space. Where are we in terms of some of the movement that we've seen in the last year or so in terms of your view on the precious metals space?
Certainly over the course of my career, and I've been involved in the precious metals business for about 40 years, there are many factors that go into the gold market in determining the gold price. But the most important, and this may be an American-centric point of view, but the most important would seem to be sentiment with regards to the ongoing purchasing power of the US dollar. When the US dollar is strong, or more properly, when there's global faith in the US economy, the dollar does well and gold does poorly. There's sort of a competition for the safe haven trade. There are periods of time like now where the dollar is extremely strong and gold is weak. We could argue, and perhaps we will later in the interview, about whether the US dollar deserves to be as strong as it is. But certainly I think the current weakness in gold is directly correlated to the perceived strength in the US economy, at least relative to others.
What about the price of precious metals in relation to some of the risks that are in the market at the moment? If you look at the volatility index, it is relatively low, but we continue to hear worries in the markets about the tariffs around the world now that have been put in place in the trade wars. That's disregarding some of the political risk, and as I said, global migration is causing all sorts of headaches for European regulators and, authorities over here. And so there's a lot of risk in the markets at the moment. Why is gold not higher?
Well, again, I think despite the fact that the world is very nervous about American political leadership, that the U.S. economy is performing better than other developed economies. And real U.S. interest rates are higher than interest rates in competing gilts. So there's, I think, a circumstance of global investors looking at the US dollar rather than gold as a safe haven. There would seem to be currently disintermediation out of both the pound and the euro, possibly as a consequence of Brexit, possibly as a consequence of continued credit fears in some of the European peripherals. And I think that the weakness in particular in European capital markets has contributed to the strength in American capital markets. As an American, I'm sort of delighted to see that occur, I guess. On the other hand, I only think the US economy is relatively strong as opposed to absolutely strong.
Yeah. If we take a look at the price of gold, I think actually on the IG spread of clients at the moment was something like about 85% long gold. When you look at this trade, and recently we've broken an important technical level up here, and indeed the support now from where we are at 1250 is now looking at something like about 1240. Do you concur with the spread of IG clients at 85% long? Is that your sentiment at where we are at the moment? We should be long gold?
With the huge caveat that I'm not a trader.
Yeah.
I am long gold. And there's an argument, being a large shareholder of Sprott, which is a brand name for gold,
right,
that I wouldn't need to own any.
That anyway.
Okay. Well, no, yeah. I wouldn't need to own any.
Right,
if the gold price does well, Sprott does extraordinarily well, and I do better than that.
Right.
Gold for me, and I think many traditional investors, is useful as a portfolio diversifier. It's extremely non-correlated with other asset classes. But for me personally, it's an insurance class. Gold has performed a function really for 2,000 years as being insurance against economic and social catastrophe. What's useful about gold is that you don't have to own too much to get the insurance benefit. When gold moves, it really, really, really moves. And it moves well in a period where other assets do very poorly. So getting back to my personal point of view, although I don't need to own any in a portfolio sense, I do own it. I own it as an insurance class. Now, it's important, if you own it as an insurance class, to understand that you actually probably don't want to make money on it. The set of circumstances that causes you to collect on any insurance policy is invariably unpleasant. That notwithstanding, the prudent person owns insurance.
Do you own bullion as a
I do.
preference, or do you own shares of companies that dig it out of the ground?
Yes and yes.
Right.
I own the shares to make money. I own the bullion to keep myself safe. Now, in fairness, Sprott is the sponsor of about $8.5 billion worth of New York Stock Exchange traded precious metals trusts. And those trusts have certain tax advantages for American taxpayers. So the vast majority of my personal holdings of precious metals are in these Sprott exchange traded precious metals trusts.
Let's move on to take a look at silver, and first ask the question, do you see silver as a similar sort of asset class as gold, or is it very different in your mind?
I would describe it as different, perhaps not very different. It's been described as the poor man's gold. Over 40 years, what I've noticed in the silver market is that silver is more volatile to the upside and the downside than gold. So momentum traders, or traders in general, probably prefer the volatility of silver to the store of value aspects of gold. Certainly when silver or the silver stocks move, they take parabolic moves. People need to be cautioned that they do that, of course, in both directions.
In terms of the silver price, I think we're 93% IG clients that are long on silver at the moment. The drop, if we just do a quick flick between the two charts, that's gold and then that's silver, you can see that we have, certainly for this year, pedaled sideways on silver. If anything, we've just ticked low. We're now, I think, as of mid-session yesterday, we're at December 2017 lows. But of course, you're a long-term picture man, aren't you? What's your commentary about the silver price in isolation, first of all, before we take a look against gold?
I believe that the longer-term fundamentals for gold are very positive, and history teaches.
For gold?
Yes, right. History teaches us that when gold does well, silver does very well. Right. They have different characteristics, but the market has learned, beginning in the 1970s, really, that silver is the leveraged version of gold. So from a trader's perspective, when you go into a gold bull market, there seems to be a delay, but silver seems to outperform gold, in fact, greatly on the upside. Whether past its prologue is, of course, a different question.
In terms of the proportions, I think we were talking before we went into the interview, and you were saying in terms of scarcity, there's a 16 to 1 difference, isn't there? Silver, of course, being the more plentiful.
Correct.
But in fact, when you look at the price, the difference is substantially more. The spread is far wider in terms of price. Why is this?
That's a good question. I suspect because they fulfill different roles. Silver is perceived, perhaps accurately, as more of an industrial material than as a store of wealth. I think that the silver price, and I'm making this up, by the way, I don't know this to be true, I think that the silver price in the last 18 months has been depressed because speculators who tend to favor silver have found other outlets, emerging markets, stocks, cryptocurrencies, the sort of gamier assets that attract the attention of speculators, I think has caused some capital to be disintermediated from the silver market into other speculative asset classes, where the gold market has been sustained by safe haven buyers who are a different club, if you will.
So you see money having gone from silver into cryptos specifically, or other asset classes as well, more so than gold investors into cryptos?
Absolutely, because I think they're a different class of human beings. Many of the silver traders are in fact momentum-oriented and traders. In the United States, as an example, the micro-cap technology stocks have attracted billions and billions and billions of dollars in the last 3 years. And some of that has been momentum-oriented trading dollars that almost certainly came out of the silver market. And certainly also the correlation between crypto traders and silver traders in the United States market would be very, very high.
Let's move on to platinum if we can quickly, because if we look at the chart of platinum, it has actually been a big underperformer compared even to gold, and I think we're 93% long on the IG platform for platinum. How much of an asset do you consider platinum to be part of the Sprott holding of businesses, and and where you put your money?
At Sprott, we're determinedly contrarian. We believe in the range of natural resources because they're so cyclical. You're a contrarian or you're a victim. I've been beginning to add to my own personal platinum holdings. The decline in platinum prices is easy to talk about. There are two factors. The Volkswagen diesel scandal. Platinum's primary industrial application is in catalytic conversion for internal combustion engines, and the decline in diesel vehicle sales worldwide has hit platinum demand. At the same time that the platinum industry had anticipated better diesel refining standards in China, which would have allowed the retrofitting of Chinese diesel vehicles with catalytic converters. That didn't happen. The story in platinum is a supply side story. We think about 65% of the platinum production in the world is uneconomic at current platinum prices, meaning that they lose money on every ounce they produce. And in South Africa, this is particularly problematic. The industry hasn't made sustaining capital investments. They have to make sustaining capital investments, but they can't because they don't have the money.
Right.
They have to increase the workers' wages. They have to, but they can't because they don't have the money. So my belief is that, and it might not happen in a time frame appropriate to many traders, but my suspicion is in the next 2 or 3 years, 5 years at the longest, that we have a very dramatic supply shock in the platinum business because the industry can only afford to lose money on every ounce they produce for so long. On top of that, you have political disruption in South Africa around Malema and the economic freedom fighters and the new mining code. So even if the mining industry could afford to make the sustaining capital investments in platinum, they're very nervous about who might own the mines 5 years from now. And they're unwilling to make the investments that they are also unable to make.
So the supply shock is going to have an effect on the platinum price when? I mean,
I don't know the answer to that. You're asking me a question that I would love to have the answer to. I know that it's inevitable. I don't know that it's imminent.
So how long does it take to set up a platinum mine? I mean, we're talking many.
Decades.
Okay, so if there's not been the investment at these levels, then presumably, ultimately, that could see the price of platinum rise substantially.
Almost certainly. Almost certainly. What's important to remember about platinum is that it takes a very, very small amount of platinum to make a vehicle legal to sell in the British market, as an example. Let's assume that and I don't know what the number is, let's assume that the median price for an automobile, a new automobile in Great Britain is £25,000 sterling or something like that. It probably takes £100 worth of platinum to qualify that vehicle in terms of air quality standards to sell it in the British market. If the platinum price were to double, it wouldn't impact the finished price of the automobile. So there's incredible price elasticity, and if you can't obtain it at one price, you happily pay a different price for it because it has absolutely no impact on the price of the finished product.
So going back to the chart, if we can bring the chart up again, you see more upside than downside from these levels.
I do. Again, I'm an investor and not a trader.
Sure.
And the question that you asked me with regards to timing, I'm going to have to
yes,
pass on.
That one. Yeah, that's right. But I've got to ask you, same for silver. I mean, silver undervalued at these levels in your valuations?
It's difficult to find a valuation. I know you want simple declarative statements, but these are complex topics. Yeah. Most silver that's produced is produced as a byproduct of other metals, produced as a byproduct of lead and zinc, a byproduct of copper. So when you determine the cost to produce an ounce of silver, you have to bring into a discussion a lot of other variables, like other metals pricing. What I can say determinately with regards to silver is that the stimulus for silver demand would seem to be an attraction to precious metals generally. It also, physical demand for silver is driven by the strength of the economy in South Asia. There are cultural reasons why South Asians are drawn to silver, one of which is its affordability relative to gold. So that what you find is that sometimes silver has surprise moves. And these surprise moves seem to be due to an increase in rural incomes in South Asia. I realize, again, this isn't a simple definitive statement. There are a lot of factors that go into a silver market. And I, unfortunately, have never been able to synthesize all of them into one forecast.
On the basis you don't want to and can't give forecasts, I do want to just go return to the price of gold at these levels at 1250, are you hearing that a lot of supply could be coming out of the market because there's no reason to invest in new supply, new pipeline for new gold mines at this sort of level? Or do you think there's more downside to go before we hit that point where mines start to have to pack up because gold price is just not economic?
There is still capital available to the gold mining sector, whether or not there ought to be at this price. If you look at the gold mining industry over the last 40 years, it's been challenged in terms of earning an economic return. But there's a certain, wrong phrase, but there's a certain luster to gold that continues to attract capital. What's interesting to me about the gold market is that you're seeing increasingly extraordinarily sophisticated investors who are suggesting that the 30-year credit cycle that we've been in is turning around. And the consequence of that, as interest rates go higher, is that some other asset classes could be punished. Traditionally, people have said that high interest rates are bad for gold. I came into the investment business in the 1970s, and the U.S. prime interest rate went up by 500%, and the gold price went from $35 to $850. So I personally don't labor under that misapprehension. What I'm saying about the gold business is that people who are concerned about other asset classes, but particularly people who are concerned about the U.S. dollar, as expressed by the U.S. 10-year Treasury, are driven to gold. Right now, people are sanguine about the U.S. dollar. As an American citizen, I'm amused by that because I'm somewhat less sanguine than other viewers.
Just one final thing. Sprott has recently launched the Physical Gold and Silver Trust. Obviously, you have a confidence in the market, otherwise you wouldn't still be investing in the way you have been. I think this is as a result of a buy-up, isn't it, of Canadian business? Is that right?
That's correct.
What was the reason to get into this particularly? Is it a timing issue, or is it just availability of this particular asset at the time?
Several things. Exchange-traded physical products in the United States are extraordinarily liquid, so they end up having less friction for many American investors than buying the physical bullion. The second is, for American investors, precious metals, physical precious metals, are taxed at the collectibles or ordinary income tax rate, whereas the trusts are taxed at the capital gains rate. So there's a fairly substantial tax advantage for Americans to own their precious metals in trust form. We represent now about 200,000 U.S. investors across the physical precious metal spectrum in exchange-traded products.
Okay. Well, look, Rick, it's a pleasure. We've got to leave it there, but thanks indeed
My
for
pleasure.
joining us with a look at these markets as things stand at the moment. That is Rick Rule, Senior Managing Director, Founder of Sprott Global Resource Investments, and President and CEO of Sprott US Holdings.